Good morning, everybody. I hope that you are doing well. We have got some stuff to go over today. So, we're going to be going over wedges. I'm just doing a quick audio check. All right, we're all set. So, audio's up and running. We're good to go. First and foremost, how about we get TradingView up so you can take a look at that? By the way, if you haven't joined us before, my name is Cameron. I'm the founder and CEO of CryptoList. Here, let me show you CryptoList real quick. This is our charting platform. We're building this. It is not released yet, but very, very soon. And with CryptoList, you're able to look into different projects and have security information. So, we can click on one of these and see. um, so you have charts. Let me show you. Let's see. Let's look at CryptoList. Oh, hold on a second. Oh, my bad. All right, I was trying to do something. Anyway, so this is the charting platform that we built, security information charts, and so you're able to see market information as well as security. So I am the founder and CEO of this. This is about to launch, so we're nearing that. But let's go and let me show you TradingView. So please join our community. CryptoList.com is our website. And of course, you can go to List Token on Telegram, Twitter, or any other platform. We're List Token everywhere. So, all right. TradingView. This is what we were talking about yesterday. Let me see if I can dull this down. I want to turn the parallel channel off. There it is. Okay. Okay. This parallel channel, I didn't. So as far as this being a potential bear flag, I wasn't really buying it. I didn't like how it looked. It didn't look, very, very clean. Um, it's kind of playing out like it is. Um, like we came down and 1, 2, 3, 4, 5 touches, kind of like this wedge, so to speak. And we came back, we touched here, we were trying to break through. There was massive suppression. We were looking at exo charts yesterday, and there's massive suppression because we had, I think it was in total, it was like 66 million open longs, and then millions of closed shorts. Especially on this platform alone, I think there was like 13 million liquidations that had happened in like the last 12 hours, like short liquidations, which would have kind of helped the chart as far as looking like we were moving up and getting buys. So what we determined is that there was a massive buyer sitting here, kind of just absorbing all of these longs, right? So he was in a short position, and he was buying all of these as it was being put in. I mean, it must have been a massive amount because it just didn't move. Like the price just wasn't moving, and yet there were millions and millions of dollars coming in. So it was pretty incredible. Like the market was trying to push up, and it just wasn't allowed. And then of course we had longs close and shorts open, and so now we got this drop. So this suppression, this fight that was waged on this trend line, it was won by the bears, right? Sorry, I got my coffee here. All right. So yeah, so it was interesting to see that. I thought for a moment, because we talked yesterday about flags, bull flags and bear flags. Um, so let me zoom in. We're on the hour. Let me go to a smaller time frame. Let me do 15 minutes. I was thinking for a little bit that this right here was going to be a flag, right? Um, because it actually matched everything that we needed it to match. We have, I think it was even the 382 was like right here. Yeah, so the 382, so we kind of had this flag, came down, hit the 382, moved up, kind of broke that trend line, and I thought, oh, okay, this is kind of like I mean, it's a smaller one, right? Smaller time frame, but this might be a bull flag. We might be moving up after all. And then I just saw continuous lack of ability to move up and move up and move up. And so when we put in this high right here, I pretty much accepted that this was done, and that we probably weren't going to be getting that victory, getting that W, as far as the Bulls are concerned, right? The Bears had won. We did end up getting a little bit higher, working our way back up, but obviously, in the end, it went down. So it was a good call, right? Because here's the thing: like the narrative didn't really make sense to me that we would be going down. We've been going down for so long. We have some higher levels that we need to test that we have yet to test at all, right? So it just didn't make sense to me that we would just dump in this way. But when we saw the market suppression, I said, yeah, I think it is going to go down. I said, if you're buying this right now, you're gambling. You're gambling that someone's gonna win or lose, whether the Bulls or the Bears, and because there is no clear range, there is no clear respect. And when you're talking about manipulation, and I say manipulation, like, keep in mind, I believe this is a sport, so I'm not like, oh, these people, blah blah blah. Look, if you're leverage trading Ethereum or Bitcoin, you're in the major leagues. Okay, you're dealing with people. I mean, we have notifications set up where we get notified anytime big money moves. And we're talking about hundreds of millions of dollars. I literally saw a transaction yesterday where someone moved $110 million in a single transaction worth of Bitcoin, right? These are professionals that have so much money. I mean, an incredible amount of money. So it's, if you're in this space, if you're doing day trading or you're, on you're on this, you need to, I don't know, I guess accept that that's how it is, right? There are people that can sit here and put in you know, a I don't know, tens of millions. I really don't know how much they put in here, but tens of millions of dollars worth of limit orders and just absorb them to to drain the velocity of the market to prevent FOMO and people coming in, because I think ultimately they want to see if they can drive the price down to 1400. Now, in this case, we might just get like a double bottom, kind of like comes down and hits this, and then we move up. That's very that's very possible. So I'm not saying that we're going to 1400 right now, but 1400 is a level, well, between, so 1400 makes more sense to me than like 1200, but yeah, I'm not exactly sure. It could be 1200, it could be 800, but my first target is 1400, so that's kind of the level that I'm talking about. So whether we take this low and we come down and actually break it right now, I'm not necessarily convinced that that's what's happening or going to happen. But I think that as far as the market yesterday feeling optimistic and being like, hey, let's turn this ship around, let's go, let's get up and test some higher levels, which is what I saw yesterday. That's what I saw when for the first time in, I don't know, months, we had, like $66 million in longs open up. There was finally some confidence, finally some pushback from the bulls. And, you see what that got you. Just kidding. Yeah, so anyway, I feel good about what we talked about yesterday. Basically saying, look, it's not as clean as a normal bear flag or bull flag. It doesn't look like it's like that's what it is. Normally, I wouldn't have the confidence, or I don't have the confidence that I normally would because it doesn't look like it should. And also, their narrative that because if this was a bear flag, let me zoom out real quick. If this is a bear flag, then our pull would start from about here and go to about here, right? Which would put us right around, $1,160 for Ethereum. That would be our target. I don't know that that's happening yet. I think that that's gonna happen. I do. Maybe not 1,160, but 1,400 at least. I think that that's gonna happen. I just don't think it's gonna happen right now. I think it's gonna happen, maybe June, July or something. I don't know. Maybe it does happen right now, but look, we haven't tested anything. We haven't tested anything in like 2 months. We haven't moved up. We haven't had any sort of fight back yet. And the last month, last 15 days, has just been straight down. I mean, basically just straight down. So any sort of levels, they just haven't responded like they should. Let's pull out here. Yeah, okay, just so we can see like the whole chart. Now, if you ask me, does it make sense that we could hit those lower levels? I mean, yeah, it could make sense. Let's draw some channels real quick. Let's do, oh, I'd love to do a speed fan, by the way. Let's do that real quick. Fibonacci speed fan. Yeah. So that's interesting. That's interesting. Doesn't tell us too much, but it's kind of cool. Let's get a parallel channel here, and we'll go from here to here. Does it make sense that we come back down and hit the bottom of this channel? We could, but again, you're asking me to believe that I think we're going to be, I mean, that would be like $980, $1,200, $1,400 right here. I'm just not so sure, right? I'm just not so sure. So it's definitely possible, but I think not. I think that that's not what's happening. So we probably do something like we come down, put in a double bottom, and then we move up and we move up and we move up, and it's more like I don't know, maybe it would be seen as a cipher pattern or something. Maybe not quite. No, but and we probably, I don't know, I'm still expecting us to hit 26, 27, somewhere in here. And by June, because here's the other thing. Look at this Fibonacci time. Look at how well this lines up. Everything just lines up so perfectly. All right, so here's June. Oops. So I guess, well, what was I thinking? Oh, that's July. Let's do this. No, September. So June, okay, so June 5th. All right, so this is what we're talking about here. So, or yeah, originally I was thinking that what we would do is we might move up, take some higher levels, kind of come up, and then maybe, I don't know, 2,500 for, beginning part of June, and then come back down, right? And start to develop a range, right? This range is very, very small. So here, let's close this down. Let's delete this, make it look nice. But Ethereum likes to range. And so I would say maybe we range from here, like, approximately this bottom to this top. That'd be a 25% range. It's not a bad range. Anyway, long story short, we saw the suppression. We didn't necessarily think that the long was going to happen because of the suppression, but had it not been for this suppression, had it not been for a massive amount of kind of absorption coming from the market, right? Then yeah, moving down wouldn't have made sense. Moving up would have made all the sense in the world. But we saw the suppression, we called it out, and we were correct. So that is pretty cool. That's pretty cool. This is the other line, by the way. So this line right here, this is a big channel that we've been looking at for a while. You can see this, right? Big parallel channel. This is the center line. And we've been consolidating under that. And I was thinking, 1, 2, 3, 4. 4 hits on it. Oh, I just closed ExoCharts. Let me open this up even more. 4 hits on that line, and surely this time we would break through. And we would have broken through. We would have broken through. We would have gone through that had not that big market maker just sat there and bought up tens of millions of shorts. Or sorry, bought up tens of millions of longs, and he was taking out shorts. But yeah, so anyway, I think we would have broken that. We could have found support here and then moved up, but that didn't happen. We got rejected again from this line. And the question is do we continue to consolidate and then break up? Or do we really move down to, 1700 again? I don't know. We'll see. But for me, there is no trade right now. I did have another lower level, which these are my levels. It didn't actually get hit. So might be a good, might be good to look for support in here. I don't think I would set limit orders because I kind of think that we might just be going for the low, right? So if you can get it at 1700, why get it at 1850 type of a thing? But I would keep an eye on here and see if we start to get a reversal. But anyway, that's and then this green box up here is one of my targets. So yeah, all right, let's move on. I want to talk about a rising wedge as a reversal pattern because that's more or less what we were seeing in this group here. So I want to kind of highlight that. Okay, so let's close this down. All right, so let me draw a rising wedge. Okay, we have something that comes up and maybe like this. Okay, and then it comes down, then it comes up, and it comes down, and it comes up. Okay, So something like this where we can have, and I know I'm not an artist. I had someone comment on that yesterday. Hold on. Terrible. Absolutely terrible. Okay. And this is, let's try this again. Let's try this again. 'Cause now I feel so self-conscious about my drawing, my beautiful drawings. They're fine, by the way. Okay. Something like this. Let's call this a rising wedge. Okay, so what do we need with the rising wedge? We need, let's do this. We need waves. All right, so we have here, and then we need touches. Okay, so first touch, second touch, third touch, fourth, and fifth. Okay, so this is where, so a rising wedge is a bearish pattern. Okay, it's where two trend lines that slope upwards and eventually intersect like this. So we have two trend lines. Let me make these a different color. So like these two red trend lines. Okay, and they slope upwards and they eventually intersect, right? And they have at least 5 touches, usually 3 on top, 2 on bottom. 1, 2, 3 on top, 1, 2 on bottom, right? And then as far as the volume profile, we want to see a reduction in volume. Okay, so let's see. Let's change these to blue. Okay, so we have like higher volume, but as the pattern, whoop, that's not what I wanted. As the pattern continues, we start to see kind of this decreasing volume profile. Okay, and then it's, sorry, geez, kind of this decreasing volume profile. Okay, then kind of towards the breakout, we have more higher volume because we're probably moving back down, right? All right. So if the formation is broken at the downside, price should retrace to the bottom of the formation at least, right? So what we're looking at right here is, so we're talking about targets, okay? So if we were to break to the downside, right, what we should expect is that we would have a target of at least the start of this formation, right? So here, I wonder if I can do a dotted line. That would be cool. I can do an arrow. That works. Okay. Which would be, you know, roughly here, kind of the start of this formation. So that would be our target, would be the start of the formation. Okay. So the rising wedge is a pattern that appears pretty often. It's similar to a symmetrical triangle, which is like a continuation pattern, right? So we kind of talked about that yesterday, or was it yesterday or the day before? Anyway, I think it was the day before. You have this, and you have, hold on a second. Okay, so this is not like a wedge. This is a symmetrical triangle, so it's kind of very equal and very even. That's usually what we get out of a bear flag or a bull flag, is something like that, or we just get a channel, right? A parallel channel. but it's a pattern. That means pattern continuation. What we're seeing here is more of a reversal, right? It doesn't necessarily have to be a reversal, but that's oftentimes what happens, especially for the rising wedge. So I guess here's what I'm trying to say. If the price comes up, right, and then it does this, and it's, you know, like something like that, it could, like, you could potentially see it as like a rising wedge. Well, maybe that's not exactly like a rising wedge, but like this is good. There is upwards consolidation too. Let me show you this. So sometimes comes up, right? Well, I'm sorry. No, I'm disagreeing with myself as I'm saying it, because for some reason when I see it, no. Okay, never mind. Forget what I was saying. A rising wedge. Yeah, that is. I guess this is why I have to trust my notes and not ad-lib it. It is a it's associated with the rise with the reversal pattern. Now, why? Can I just explain myself real quick? What was confusing is you can have consolidation that is ascending, right? But the difference, right? What's in the note that's different? Well, these aren't intersecting, right? This is a parallel channel. And so that is very different. These are intersecting, it's narrowing, right? And it is far more common that if you're getting this narrowness, right, that you're looking at a reversal. This right here has its own type of like it usually has a faster reset, like flash crashes, things like that. But it also could be indicative of a very bullish market, because every opportunity to get a lower price is bought up and we go to a higher price, right? So the difference is these lines intersect, these trend lines, where these don't, right? So that's why I stopped myself. Okay. But we can see this here. It's not perfect, okay? It's not perfect, but I do want to submit to you. We have this. Let's see here. Like this and like this. Okay. So this, I know we broke above here, but I want to submit, and this is, no, that's more symmetrical. Forgive me. Forgive me. Forget that. I thought that we might find it here. Let's keep looking, see if we can find one. In a sense, I want to point something out, because I think this is the thing that I'm like hung up on, and this is okay. I see what I'm talking about. I see what I'm talking about here. This is why I was thinking this, and it is. It actually is. From here to here, and then here to here, okay? But what I'm thinking about is from this perspective. So we're moving up, we're expecting higher price action, right? 1, 2. Is this a rising wedge? No. No, I guess it's not rising like my drawing is rising, but this is what I want people to see, right? Is we start to lose like these highs and it becomes a reversal, right? Like the market, it's a market structure change. And so obviously here we lost that low and then we didn't put in another high. So I guess that's what I better just stick to my script. I've improvised twice now and regretted it. So I'm sorry about that. Because so the rising wedge is this, but what you're seeing is a loss of momentum. You're seeing a loss of momentum here, right? You have the volume profile going down, right? So the volume profile is waning, okay? You're having a loss of momentum because you might be taking the highs, but like just barely, right? And you might be getting lower lows, or sorry, higher lows, but it's on this reduced volume, right? And so there's not a lot behind it. And if you break to the bottom, you check here, right? You get confirmation here, and then it comes back down to the formation of the rising wedge. Okay, I'm sticking to my notes. Sticking to my notes from this point forward. Hoping to find it in a real life pattern, but what I'm showing here is a little different. By the way, let's just look at Ethereum as it continues to dump. We're at the daily low. All right, so it did look like an ascending wedge to me, but not certain though. So yeah, channel, I meant, that's Loco Scotch. Yeah, I appreciate it, my friend. Thank you for the comment. Yeah, I appreciate the comment. Yeah, I'm just sticking to my script. Sticking to my script. All right. So, how do you trade a rising wedge? I think we're good getting rid of all of this. Okay. So, from here to here, done. Okay, let's get rid of some of these lines. Get rid of those. Okay. How do you trade a rising wedge? Okay, so for an aggressive strategy, oh, okay, let's have that back on. It would be a short at the third top of the wedge set and the stop loss above the trend line. And of course, we use confluence. Okay, so the stop loss for the aggressive strategy can be the 1-to-1 extension of wave 3. And okay, so here's what we would be looking at. If you're being aggressive on a short for this pattern, you would be buying this touch, right? 1 to the third touch of the top line, right? And then you would have your stop loss above this trend line. Okay, so your stop loss, let's put in here, would be somewhere in here. Actually, let's just do a line. And I'm going to get rid of this arrow because I don't like these arrows anymore for this. Oh, come on. Going back to lines. All right, and let's change this to red. Okay, so you'd have your stop loss just above this line here, this trend line. And it could be a 1-to-1, so you could see, all right, what is my distance here? And you could put your stop loss, from here above there. So you could move it a little bit higher, like whatever this length is, that could be your stop loss. But generally speaking, it's just above this trend line. Okay, so whatever you feel is comfortable. Okay, and that's for keep in mind this is an aggressive short strategy, so this is really for like day trading, right? Maybe even well, I'll just say, yeah, day trading. Maybe not a scalp, but possibly. So aggressive way is to short the third touch of the top of the wedge. If it's a bearish scenario, you have different kind of confluences. So maybe like a bearish divergence. And of course, you have to make sure that the volume profile is correct, and that the price is reaching like a horizontal resistance or something like that, right? I mean, so you don't want to just take this, but if you had, maybe you have like a bearish divergence, that you have like a point of resistance coming across here, some other things like that, then of course we're always looking, we call it confluence, but it's where you have multiple reasons to take the trade. So if you're going to be taking a long, you better have a couple reasons why you're taking the long. If you're going to take a short, you have to have a couple reasons to take the short, right? So a conservative way is to wait for the support trend line to break. Price must close below the short. Sorry, the price must close below and short the breakout as soon as it breaks with a market short. Now, this is a strategy, but I don't particularly like it. Okay, it's like this, right? You would be buying on that green part, a short. Could you do that? You could. You definitely could. With a rising wedge like this, it's far less risky. Keep in mind, this is what we generally see. I'll tell you, this is what we generally see. Let me move this. Nope, I can't move that. Let me move the trend line to be like this. Okay? What we generally see is consolidation right here. Okay? So I would say this, if you see the price come down, there's a little bit of a fight usually where the bulls are saying, okay, this is a good place to buy because we're going to be heading back up. And the bears are saying, oh, I'm going to be buying the break of this trend line, and they're kind of like front running it and whatever. So there's usually a little bit of a fight here. And if you want to buy there, that's maybe a better place to buy, or on the confirmation touch back here if you get it. You don't always get that confirmation touch. And this actually happened here. I'll show you this here because, all right, so are we on the 1 hour? Let's go to the daily. Okay, let me show you this real quick. Actually, let's go 4 hour. Okay, so same thing. But we had a channel. It was an ascending parallel channel. I'll draw this real quick and I'll show you we did not really get, from my recollection, a touch. We hit it and we broke it. Okay. There was a little bit of fighting above. Okay. So this is kind of what I'm talking about. We came back down. We hit the line. There was negotiation, right? Me and a couple other investors thinking, all right, we're going to hit this and we're going to continue to have, we're going to start our reversal, right? And look, we broke straight down. There was no back touch. There was no back touch. It was just moved. And then we just move down, right? So you didn't have an opportunity to buy the confirmation touch coming back, right? So in this case, this consolidation, this is where you would have had an opportunity to buy that. Okay, so what I'm saying is it's kind of the same thing. Is here you probably have consolidation, but especially in a bear trend, right? You gotta judge the market. If this is coming off of like a big bull run, you're going to have that. You're probably going to have that back touch. But if you're kind of downtrending and it's been down, whatever, and you're kind of coming up, you're probably going to see a more ferocious, like just leaving the area, right? So keep that in mind. All right. So an even more conservative way is to wait for a retest. Okay, so that's what we're saying. All right. So there's a few things. It's funny that I have my notes this way, where it's like buying here is seen as aggressive. Buying here, right on the break, seems conservative, and then the most conservative would be to buy on the retest, where we have it come like this. I actually think I want to word this differently. I guess it's because like we're still speculating and we haven't got that break. But to me, this first buy, is the safest one. You have your stop loss right here, right? You're easily disproven. But to buy here, right, you're gonna be able to, you're taking a lower position. You need a more movement. Let me show you what I mean. If I can pull this up real quick. Give me just a moment. I'm going to pull up my trading partner. Okay. All right. Let's look at this. I'm going to show you my window, because we're going to go back and forth. And you're going to see this. Okay, cool. Let's say we're going to take a trade. Okay, we're going to take a trade. Here's, maybe we got $1,000. We want to change this to short. So we change it to short. And we're going to put in our stop loss. Okay, let's just say that this is realistically our trade. We want our stop loss 22.70. Okay, so 22.70, we're getting stopped out. Okay, entry price, we're going to maybe buy in 21.64. So 21.64. Let's have another buy right on the trend line, 21.91. 21.91. And we want anything above it, maybe slightly, we'll just say 22.09. 22.09. Okay, so we're just gonna, I like having multiple buys. I like to kind of ladder into stuff because we get a better average. All right, so position size. Oh, and then our target. Well, so our position size is $266. So we're able to put a decent amount on this, right? So we can put like 88.66 on each one of these trades. Okay, perfect. We're still good here. And now where's our take profit, right? So we could do a take profit, like, I don't know, what is this? So let's say that's 5%. Let's see this. Let's put in so 2077 is our first. 2077, okay, is our first. And we're just gonna take 10%. Wow, look, that's $30. That's $30. That's pretty big, considering that we're risking 10 and our first take profit is gonna be $30. That's like almost our 3-to-1 ratio just there. Okay. And then our other take profit, let's just put it at our line 2, or our like our second wave, because we're going to be really conservative, because why not? We're going to say 18.25, right? 1825, we take the rest of this. What a great trade. It's a 5.52, right? So we're going to profit. I mean, we're in a free trade as soon as we're proven right. As soon as we get the touch on that bottom line, we're proven right. Right? And we could even say, you know what, let's go really kind of risky, right? And it's not actually even risky, right? 5% instead of the 10% take profit, meaning we're going to, at this line, okay, at this line, we're going to take 5% instead of our typical 10% because we're still getting a free trade and actually still profit, right? Risking $10, if we hit that line, we're getting 14. Now we even have 5% more of our bag to travel that whole distance. Now it's 5.75 to 1. That's the risk ratio. And we are making a good margin on that. That's a really good margin, right? So assuming we have our reasonings, boom, take the trade. That's a good trade. Now, so for me, that's not very, we're risking $10, but it's a 5.75% or sorry, 5.75 risk to reward. So it's like, yeah, you know, $10 if we're wrong here, right? We lose that trade. But if we're right, we get a free trade really soon, right? And we get a lot of money if we're correct. And so let's now take a look at not buying this fifth, okay? Let's take a look at buying this one down here. So now we're buying at 2078. Okay. So now because all these numbers are going to change. Hold on. Let's do this first. Because the stop loss is going to be the same. The thing, the stop loss doesn't change because we might buy here and come back up and get another one. Right? So we're not going to put a stop loss here. The stop loss is going to stay above this trend line. Right? So if we buy it where we think it's going to break or on the break, maybe because it's a fake out and it comes back up, right? And then it is going to break. We still have to keep the stop loss there. So let's just say, all right, we want to buy 3 positions still. So we're going to do 2097. Okay, so 2097. We're going to buy, and this is going to, keep in mind, these are now market orders instead of limit orders. So now we're paying a higher fee. Then we're going to buy, no. We're going to buy 1 market order on the break. That's what we're going to do. Okay. And the break is 2077. That's what we're going to do. So get rid of that. 2077. Okay. We can put $100 on here, right? We did on the other trade, it was 266. Now we can put 107. So we can put $107.62. Okay. Our first take profit is not there because that's entry price. So we have to move that, right? Where do we want our first take profit? Maybe 1919, we'll say. We'll just say 1919. 1919. We got it. Let's bump it back up to 10%. Right? All right, we got a free trade at 1919, but we can't even take the trade. It's 2. Right? It's 2 to 1. We don't need 2 to 1. We need a minimum of 3 to 1. Right? So this isn't even a possible trade. Right? If we want, and we were kind of being conservative, so we could technically say, all right, we could go to like 1784, like 1784 on that might be. We're still not there. We're still not even to the 3 to 1. So you can't take that. So this clearly is a riskier trade. It's a clearly riskier trade. Whereas as soon as we get this trade set up, on the other trade, had we bought this 5th line, we're actually at a free trade. So we would have been at a free trade by the time this trade is being purchased at a market order, and it's a much riskier trade, right? So I think that this really isn't a more conservative route. I think that this is a riskier route. I think it's more of a degen play. So now let's say we buy this touch. Now we can do limit orders on this, and we can ladder in. So let's say 2115. All right, so let's do Let's do 21.15. Okay. We want to do maybe 21.40. Okay, 21.40, and we're just in case we try to break up, we're gonna do 21.62. 21.62, right? We can do $163 now, so it's still $100 less than the previous one, but 163, divide that by 3, so we can put $54.33 on each of these, right? Okay, good. We're good there. Now, our take profits. Can we take a take profit at 2073? At that low again? I don't think we'd necessarily have to take it at that, but let's just see. 2073. We could take 10%, right? We get $16 there, so we're in profit. It's a free trade. Can we go with a 5%? Could, but we kind of want that free trade. I like free trades. All right, so we could take 6%. That's a free trade, right? If we get stopped out, we don't lose anything, right? And then we could put on the rest of that 100%. Now, can we still have this lower target? We were at 1825 before. 1825. Can we do that? We can't do that. Nope. Now we're not there. So we still have to keep a lower target. How can we do 1800? We can do 1800, right? And it's a 3-to-1. 3-to-1, so it hits our criteria. It's a good trade. This is a trade you can take, right? You get a break even, like a free trade pretty soon, okay? And you can be a little bit more conservative as far as getting out of the trade earlier and making your money. But the difference is really not that high. I mean, like, so we were looking at almost twice as much money by buying this fifth wave than buying this retracement. So if I had to say which was the safest, I'm going to circle this in green. That's the safest. The next safest is this one, but this is going to be orange, okay? And then this trade, buying the break, right? In this particular scenario with these numbers, you can't even take the trade. You're not allowed to take the trade. So, I don't agree that this is actually the most aggressive. To me, this is the most aggressive. This is FOMO degen, right? This is, I missed this. I'm waiting for this. And I would rather have this than nothing, right? That's what this is to me. If you see it early enough, you buy this. If you miss it altogether, you're looking for this, right? I think that's good. So let me see if there's anything else I want to point out on how to trade like a rising wedge with a reversal. So, okay. So targets for the trades are 3.382. Yeah. Okay, so here's a good idea for. All right, here's a good idea. Let's say wherever the okay, wherever this starts, right? So if we're like, all right, so I'm saying it starts here. I want to actually start right here, like 1815 to the high. Okay, what we would be looking for 382 and 618. Okay, as far as take profits, these would be good levels to take a profit at. Now, for me, I like much better how we were doing it. Okay, it was at this break, right? If you can take profit sooner and still have a good payout, which we did on this green trade right here, it was an amazing payout. 5.75 to 1 risk ratio with a great payout. That is perfect. That's basically two good trades, two acceptable trades in one. So to get a free trade and be in profit sooner is better for me, right? I don't necessarily want to hold just a little bit lower when this makes more sense. I'd rather, right? Rather have the for sure thing. Always. Always have the for sure thing. So, but if you're buying here, you might want to say, yeah, all right, this is going to be my take profit. This might be another take profit, right? So somewhere in here, right? And then this, where we started it, would be the bottom and our final target, right? Where we would expect it to reverse. So, and then let's see here. So sometimes the wedge can be seen as an ending diagonal structure from an Elliott wave theory. So, we've talked a little bit about Elliott waves. We really haven't gone into the theory too much, but just kind of pointing it out. You've seen me count them. So this usually appears in the fifth wave of a bigger impulse. Another note, if the volume doesn't look perfect, just look for the specific volume while price is touching the top of the wedge. It must be declining. Okay, so if volume is not looking like real good, I guess through this whole wedge. Sorry, I know we got a couple things here. Let me delete this. What I'm saying is we're looking at volume, and volume is not necessarily declining, but on this last wave and to this section, it is, right? And then we start to get a pickup. That can work too, right? And as far as using the so this, I guess this is the reason why it's called aggressive is because you're all right. So here's the theory. So for me, I just showed you why I think that this is actually a more conservative play than these, right? Here's the difference. You have confirmation, right? Here, and especially here, you have confirmation. The probability that it's going lower is much higher than this, right? You don't necessarily have the probabilities with you, right? But if you're buying, so not just this pattern, but there's other reasons to buy it. So we have a horizontal resistance. We have, some sort of resistance level or something like you have to have another reason to be buying this right here. But if you have that, or you want to wait for even confirmation of like a rejection here, that might be a better thing to do, right? But the thing is it's I guess seen as more risky because it can move up and invalidate you much quicker, right? You're seeing a pattern and you're buying the pattern without confirmation, but that's to me that's just not as I don't know. To me that's just not as risky, right? Because the payoff is so much more. The payoff is a big payoff. And look, anyway, yeah, so I think that if you're buying it regardless, you want to be buying and trading with multiple levels of confluence. You really want it to make sense. You really want to see the narrative, trade. You want to see the drop of momentum and everything kind of lining up. And if you're buying this one, have a couple reasons, right? Maybe there's a top of a range or something, so some horizontal line, or some other channel, previous channel that could give you resistance. Find something, see if there's something, and then that becomes, in my opinion, a really good trade. But you do want multiple factors on that. You don't want to just trade, and I would say this regardless of any one of these trades, the more aggressive or the the more conservative. you want more than one reason to take the trade anyways. So, okay, that's rising wedges on a like a reversal, and how to trade them, how to take profit. Again, not financial advice, whatever I have to say to protect me legally. You own your you own your decisions. It's your responsibility. It's your money. But I hope that was entertaining and helpful, and I hope you guys have a great day. Take care.